There's a lot happening in crypto right now, and I'm going to do things a little bit differently today because I believe that we are approaching the verge of maximum opportunity in this cycle right now. If you didn't get in the bear market, you're going to get another opportunity and it's not going to last long. So now is the time to get prepared. So I'm going to flip the script and I'm going to give you exactly how I see this cycle playing out in 1 minute or less right now. But if you really want to do well in these markets, I suggest you stay tuned to the end because I'm going to back it up with charts from top analysts and analysis that will help you have more conviction in your investments so you will be able to win at these markets. Because the number one reason people fail is that they don't have conviction and they get shaken out in the massive volatility. And I don't want that to be you. So stick around because this video may very well change the course of your investing career if you're just getting started. So I'm going to break it down in 1 minute or less. Here we go. Bitcoin will not break above $48,000 until after the halving set to happen in April this year, which is the bull market doors. As soon as we break above 48,000, we are off to the races and on to new all-time highs. But before then, we could have a rally that could get people excited only to be a failed attempt that would send us back down to revisit our structure that we built in phase one of the bull run around $30,000 to low $30,000. Unless it breaks the point of control at $46,500, in which this would be invalidated, but it's not likely. So what is likely is that we have this sizable correction with some dates in mind, which are mid-February, particularly February 14th, and we could be setting in a new monthly low at that point. My buy orders will be anywhere from $34,000 to $36,000, as I am not trying to catch the bottom, just a really good entry as we head into crypto spring after the halving and Bitcoin breaks those bull market doors and we start to march on to new all-time highs and into crypto summer when altcoins begin to see a true altcoin season, heading to the end of 2024 with a catalyst like Elon Musk is set to launch X as a fully functioning financial platform to replace the banks, which will start Bitcoin on its parabolic rally to 100,000 and possibly beyond. And we will see Bitcoin top anywhere from beginning to mid 2025. And we will be in the next bear market maximum opportunity in 2026. There you have it. It wasn't quite a minute, but it was close. And that is all of the things that I am looking to this cycle and how I'm positioning myself. So basically, we have the next 2 to 4 months to change the course of potentially our entire financial future. So there's nothing more important than that right now because that gives us freedom. Let's dig right into this episode in which I'm going to show you all kinds of facts to support my thesis. And we're going to have a look at some of crypto's most influential players, what they're thinking about, and how this ties into my analysis as well. Now that you do have the facts, the only way you're going to really have conviction in your investments is if you understand what you're investing in and you're able to see the longer picture. And that's all that matters. The bigger picture is all that matters. If you can't have that in your mind, you won't win. You'll be shaken out by all the volatility. And I don't want that. So without further ado, I'm your host, Megan Nilsson, aka Crypto Megan, and let's get right into it. So as you can see, we are 84 days away from the Bitcoin halving, currently set to happen on April 16th of this year. And my God, this is the most incredible opportunity you will get this cycle. And it's time to take advantage. But first, we need to study just exactly what's happening on the macro scale to have even more conviction and why you're in the right time at the right place to be able to be on the side of history that people wish they could go back to when the internet was born. So let's have a look. Okay, so here we have the stock to flow chart from one of my favorite analysts, Plan B. And he says here, my two favorite Bitcoin models, the 2019 stock to flow model prediction and the 2022 market cycle model detection. Bitcoin is perfectly on track. Patience is key. Absolutely. Patience is key. And so in order to start our mentality training in this episode, we're going to zoom out and we're going to have a look because Bitcoin is still following this stock to flow model quite well. And right now we are still in accumulation zone heading into the next parabolic phase of the market, which is the bull market. We are lucky. When you have more conviction in your investments, that's when you celebrate the corrections in Bitcoin, not because you like to see the price go down, but because you see it as an opportunity. I myself feel that I can't have enough exposure to this market. And so every time we correct, not only does it give me another opportunity to get more entries and to average in more, but also it's healthy for the market. So the bigger correction that we get right now and the more sustained sideways period, accumulation period, the bigger the explosiveness can be and the more sustainable it is. So when you have this conviction in your investments, you won't be so scared of these corrections. Rather, you'll see them as opportunities. And that's what I want for you. Getting right into it, we have all kinds of ads coming out for the Bitcoin ETF, notably BlackRock for the boomers, in which BlackRock explains that this is the absolute best way for you to hold Bitcoin, makes it simple, easy. And then you've got Coinbase trying to appeal to millennials who feel that they just can't get ahead in life because of all of the debt and everything that's working against them, including inflation. So we're at a crossroad right now in which we have the opportunity to break free from that cycle. So we're going to have a look at a few clips with Raoul Pal, esteemed macroeconomic investor and Bitcoin investor as well, to hear what he has to say because he breaks this down really well.
Literally the perfect macro opportunity of a lifetime. It's been the best performing asset class of all time. It won't go into infinity doing this, but this is a very high probabilistic outcome that the next 2 years make life-changing money, right? And most people who are young can't afford property, straddle with student debts, kind of people are drifting around, living in Koh Samui or whatever, right? Because nobody can really, you can't really settle down, even, all of these, friends of mine turned 35, 36, they've now got kids. They're like, shit, how do we afford kids' school fees? Could barely afford the house, all of that stuff. This is the opportunity. This is the chance to make some proper money. And so that's why I really care about not fucking it up.
So I love his very famous last words. That's why I care about really not effing it up. If you just don't F it up, this is the opportunity of a lifetime. And it's the chance, the opportunity for freedom, for financial freedom, for, we've had these opportunities throughout Bitcoin's existence, but now that most of the world is starting to hear about it, maybe it's, among the point of opportunity that we get at this level for the foreseeable future, because now we've got institutional liquidity coming in and we're still in time to front run it, but we may be limited in number in those years that we have to get allocated to these assets. Now, what I really like about Raoul Pal is the way he ties in the Bitcoin macro cycles to the economic macro cycles and how they really coincide, and in fact was potentially planned that way by Satoshi.
This is macro spring and crypto spring. The cycles are actually the same thing. The Bitcoin halving actually just relates to the macro cycle.
Let's talk about that.
Which is all interest rates in 2009 got reset to zero. Everywhere. It was a debt jubilee. It was a great reset. Nobody understands this because everyone wants their debt jubilee was to forgive all debt. They didn't. They forgave all interest payments. So what happened is every government on earth reset their debts between 3 and 5 years. So we've got this 4-year cycle, which is the Bitcoin halving cycle, which is the economic cycle. They're all the same thing. So now we're in the phase where we need to pay the interest on the debts from the pandemic.
Okay.
In 2024, 2025, those went exponential. And the only way of doing it has been put it on the balance sheet of Federal Reserve. So I went back and I think I was the first person or the only person to show that all balance sheet growth of the Federal Reserve was just the payments of the debts, the interest. The conclusion of that is there is only one outcome to everything, which is more cowbell. They either stop yields rising, like in Japan, it's called yield curve control.
Okay.
And what that is we will pay this price, let's say 5% on bonds, regardless of how many you sell us. And to do that, they print money. Or
it's either more liquidity.
or I think they're trying to overshoot with inflation on the downside, bit of unemployment rising. So then they have the cover to cut interest rates and stimulate. Election year, always stimulus. So all roads lead to more cowbell.
There you have it. All roads lead to more cowbell, aka stimulus. We always have stimulus years during the election because they want to get re-elected. I mean, this is kind of like a cycle that's been repeating for years and years and years. And this is why it makes sense not only in the Bitcoin 4-year cycle, but within the macro cycle, which Raoul Pal says that was possibly and most likely timed that way by Satoshi as Bitcoin was launched on the back of the recession heading into 2009 after 2008. And I'm going to show you a quick clip from his next theory, which is that this is a story about technology and debasement as people are understanding. Like I said in my last episode, imagine that your spending power, if you just worked the last 50 years of your life, you've essentially lost 20 years of hard work due to inflation because you have 40% less spending power.
It's got a faster adoption curve. It's a technological adoption story. Everything else is noise. It's technology plus debasement. NASDAQ is the second best performing asset. Why? Technology plus debasement. The S&P basically just about offsets debasement plus dividends. Real estate doesn't offset it. Gold doesn't offset it. So what I started doing was dividing all assets by the Federal Reserve balance sheet as a rough way of looking at it. And you get a really different picture. The S&P has gone sideways forever, which is why people who invest in their 401k in the S&P passive index, they never get ahead. So because property goes up and gold goes up and all of the assets go up the same amount. So you're just not making gains. NASDAQ and crypto have been the only two assets that do it. What happened in 2020 was the same that I saw with the Occupy Wall Street movement and the indignados in Spain when I was there. Is like the pandemic hits and they're like, we've been doing what we're told, but we can't afford anything. We're in debt. House prices go up. We're not getting any richer, and we're all doing two jobs.
Yeah.
So what the hell are we supposed to do?
Right.
So they took a rational approach. The media, and it really annoys me, the media scoffed at them, as did Wall Street, to say they became gamblers. But they didn't. Well, they did, but what they did was use their discretionary income, because they were doing the 401ks and they were doing all the right things, but they took discretionary income and said, we need something with a high risk reward.
Right.
And it was actually a very valid thing. So the two assets became crypto and technology options. So it's the rise of Robinhood and the rise of Coinbase.
So there's a lot to unpack here, as Raoul Pal basically says, if you've been investing into the S&P, you're just barely getting by compared to or alongside inflation. You're not actually making gains. That's very hard to conceptualize. You're just treading water. Michael Saylor has a really, really interesting video on this. You are essentially treading water. And the only way to outperform, Raoul Pal says, is by the NASDAQ or by investing in assets like crypto. Crypto, Bitcoin, has had an average return of 250% for the last 10 years. So millennials are starting to realize this much more quickly than the rest of society, but the rest will follow. And that's what they did. They did what they were told during COVID and Corona, and they followed their government's orders, who are supposed to have their best interest in mind. And they realized that they were just SOL, that they were left out to dry and that they were not in a great situation. So they took that income and they reinvested it into something that had the potential, the risk reward, to take them out of that wheel. And you know what? I commend them. It was brave. It is brave to be in this market. It's a new frontier, but with every great risk comes great reward if it's an educated risk and you have a thesis to support why you do it. I'll show you this chart. Periods when to make money. This has been circulating around Twitter, and it's really interesting because, the only thing consistent in human history is human emotion. And that's the ups and the downs, the highs and the lows. It's been the only consistent thing. And so this chart was developed in 1875 and yet has been scarily accurate, foreseeing the Great Depression, World War II, the dot-com bubble here. And right here, when we started to have the decline, 2023, it shows down here in the C column is when it's the best time to buy because assets are the most depreciated. And yeah, it coincides. 2023 was starting to become a better year, but it was also a great decline as well. So the point of this chart is to show that, like, even if it's a new asset and there's different ways of reading charts and following cycles, stays the same essentially because we are so closely correlated to the macroeconomic cycle and human emotions. So keep that in mind. Next up, I'm going to play some clips for you now from my podcast with Tim Draper in Miami because he sheds some light on what it is to invest when actually nobody is in it. So these are very forward thinkers. Right now, you're investing in an asset that is starting to be caught on by the world. BlackRock just entered, the biggest asset manager in the world by asset under management. And so there's a lot going on around the world to make you feel more comfortable in your investments. But Tim Draper invested when none of that was happening. And in fact, he bought $30,000 Bitcoin from an auction from the Silk Road, the dark web that our government seized. And he had no idea where it was headed, but he just knew it was the future. So if he could have that conviction back then when he bought it at $600, imagine now. Let's have a look at this clip.
You bought 40,000 Bitcoin.
30,000.
Well, in the beginning.
40,000 at
somehow
30,000.
And then you got 30,000 out of the Silk Road, auction from the U.S.
Yeah.
And you said you looked at it. You said, "I think this is a good idea." And what was the price you bought it for at that time?
$632.
Wow.
And market was $618. And everybody I was talking to was saying what a discount they would pay for it. They were all saying, well, it's a lot of Bitcoin, so, what's the discount that I'm going to pay? And I was thinking, first of all, I think this is here forever. And if it's not, I'm going to lose my money anyway because, whether I pay $618 or $632.
Right. So it's kind of like that thing. It's either going to zero or infinity because it's a system. If it works, it works. And if it doesn't, it doesn't. That's the way you thought.
That's the way I was thinking about it.
Wow, that's pretty visionary.
I thought, okay, I'll bid 632, and I thought I would get one or two of the lots. There were 9 lots. I got all of them, and it was like
you didn't expect
it was
that.
like you paid the most for the painting. Now what's it worth?
You got stuck with it.
You're stuck. You bid it up, and then
that's a great story.
So I paid the most to anybody, and then it went up to 634, and then down to 180.
Oh man!
And I looked like the biggest idiot. And then I just thought, well, just hang on. It's fine. I actually bought more. The Winklevoss bought a bunch in that second auction, which was much cheaper.
Right.
A smaller
so they
auction,
went in
but much cheaper. And I bought some, and they bought some. I think they sold theirs, kind of. But that piece, I invested in a bunch of Boost startups because Boost had created the first Bitcoin accelerator.
Okay.
And I invested in a bunch of them, and I invested in Bitcoin. And it was really interesting. They all, except for one, all of them took the Bitcoin, sold it at 180, and then tried to build their business off the, whatever the investment was that I made, except one. And he did this sort of gradual thing, and he's the only one still in business.
Look at that. Look at that. You got to have the vision. And so let me ask you, have you sold any of those 30,000 Bitcoin? No. Wow. That's incredible.
No. I mean, to have the wherewithal to buy Bitcoin at that price and see it tank down to $180 after you bought 30,000 at 680. I mean, for him to have that kind of conviction and think, well, I'm going to double down. And he still holds all 30,000 Bitcoin. And the story about all the startups he invested in that sold their Bitcoin and tried to use it toward building their business, the only guy that stayed in business was the one that didn't sell. So the lesson behind this, for those of you who are still here, you're the OGs. Comment down below if you're still here and let me know what you think about all this, about this clip with Tim Draper. Are you going to have the vision? Are you going to be able to stand the test of time in this market? I mean, that having that kind of forward-thinking vision, it's not common. A lot of people want instant gratification, but if you're willing just to stick around a matter of a year, several years, you are going to win big. Your success is almost nearly guaranteed. That's not financial advice, but that's just the way that I'm looking at it. Just like Tim Draper said, if this thing's not going to zero, it's going to 1 million plus, because it will become the new monetary system of the world. And he has evidently undying conviction in this asset, which he's going to start accepting. He is accepting in his Draper University ecosystem and all of that. So he foresees a world in which Bitcoin is the monetary reserve currency. World reserve currency. So the next clip is about letting people be free. And that historically, that has been the absolute best way for the economy to flourish, as well as people looking for greater opportunities in life. Check it out.
On hold or something. It just doesn't work. It doesn't work.
They didn't think this through. It would have been very simple for them to just sort of say, okay, we're gonna let this thing rip. You know, Clinton did a really good thing when the internet was coming up, and the press was starting to say, how do you tax and regulate and whatever, you get in front of this thing. Clinton said, let's just see how it goes.
Which is not
and he just let
usual,
it rip.
Right?
And
yeah.
as a result of just letting it go, we have Amazon in the US, we have Google in the US, we have Apple in the US, we have, you name it.
Right,
all
the
of
major
those
tech
internet companies, Webflow, Uber,
versus all the ones that want to go offshore now.
And right now, all the innovators are going, well, I got to go to Dubai because they're letting me innovate there. You know, we don't have people protecting the widows and the orphans. And my feeling is the orphans need to be able to take risks, because they've come off a tough childhood, and we're not allowing them to take a risk and try to make a life for themselves.
And have this incredible opportunity. You know?
And the widow, I haven't met a widow who wasn't rich.
Oh man, I mean that's Tim Draper's got a real great sense of humor, to say the least, and just digging into what he's saying here, I mean, yeah, you've got to allow people to have those opportunities and to seize them and take those risks if they want to take those risks with, you know, some guidelines and boundaries in place, but in general, letting them be free. So the last clip I'll play from Tim Draper, because there's just, you know, these are the people to follow for your financial and mental models, for sure. I mean, these are the people that have the vision of how things play out over time, not today, not tomorrow, but over the years. So he's saying that we must get in before this particular moment happens, and you're still in time to do so. So what are you waiting for?
Part of it will be when it hits 250,000 or 1 million or 1.5 million or 5 million, it's going to be where people are kind of indifferent as to whether they hold or spend. Right now, it's like, I'm not getting rid of mine.
Right, yeah.
I'm not spending mine. I'm not investing mine. I'm holding on while this thing plays out. And, but there will be a moment where I kind of go, well, or people like retailers won't even take dollars anymore. So that'll be a time when I have to use my Bitcoin to buy whatever it is I'm trying to buy. And then part of it will be Bitcoin increasing in value. And part of it will be the dollar dropping off in value.
Yeah, and that's happening.
So what $250,000 means today and what it'll mean after the bank run are going to be two very different things.
So that's the message. That's the message we stick with, is that like, there's no telling what could happen to the price when that moment happens, whether it happens in this bull run or the next bull run or whatever it is.
Well, I mean, I don't believe we'll still be valuing things in dollars.
Right.
So you'll just say Bitcoin, there won't be a reason to hold fiat.
Right.
Everything can be done in Bitcoin. Why would you?
Wow. This just, it puts it all into motion for me. If you're watching this and you're still confused as to what the future is of this asset, there's no way. And if you notice, it's like, follow the money. These are the billionaires that have the vision. So what I find interesting is that he says when the bank run happens. It's not like an if, it's a when. And we've already seen a bank run last year in the beginning of the year. And what happened during that bank run was that Bitcoin went from $19,000 to $30,000, something that nobody expected in what Larry Fink, the CEO of BlackRock, calls a flight to safety. So that was like a test run, and banks are shutting down all over the world. JP Morgan just got fined today for trying to silence customers about its bad behavior. I'll go over that in a future episode. But the point is, there will be a massive bank run. And when that moment happens, you don't want to be running to get your dollars into Bitcoin. You already want to be allocated. So today is as good a day as ever to start. Now we're getting on to the technical part of this episode, and we're going to hear from two of my favorite analysts that break things down and make them simple and easy to understand. And they're also really good at what they do. And I like to group all of their analysis and pair it with mine to build a bigger thesis. So this is Eric Krown, and he's talking about, what's going to happen in the near to midterm.
As the weekly time frame is actually about to lose the median as well this week, as it is going to be closing today in 16 hours, 23 minutes, and 7 seconds. And assuming that Bitcoin closes anywhere below 43,100, it will officially lose the median. Thus, a corrective period is very, very likely. You can see in this past year, anytime that Bitcoin has lost the median, it's actually played at some point down at minimum to the bottom side of the blue 50% of historic returns range lows here. Again, this will probably change coming into tonight's new open for the new weekly. But as of right now, it's 35,350. So again, we'd probably be looking, somewhere down around there. It might get marched up to like 36, maybe even 38 over time as well. Definitely.
And that this could be a very boring time, but for you and I, it's going to be fireworks explosive, because I'm going to be getting into altcoin videos now, because now is the time we have to put our head down, grind, and build the portfolio. And it is a very exciting time because of what's ahead of us this year.
That Bitcoin's most likely to come down from this region and try for that monthly high or low, in these next 2 to 3 months here, let's say, kind of correlated with the halving as well. You're probably first going to see a bounce into this region, but that will be wrong if you see this bounce, assuming that we even get the bounce, but I do think it's quite likely, based off the setup that we referenced yesterday. If that bounce reclaims $46,500.
This is also tying into my analysis, which is that we are knocking at the bull market doors, and the spot 618 level of resistance, which are the bull market doors. As soon as we break above that level, the march on to new all-time highs. We're going to hear from my second most preferred analyst that really breaks things down, makes them simple, and zooms all the way out, Steve from Crypto Crew University. And this is supporting the thesis that we will retest the base, not only because of the analysis he has here on the charts, but also because this is what is necessary to maintain healthy market structure in any market, is a correction of that magnitude, and to build a foundational structure upon another structure, and not just a house of cards that gets blown away with the wind.
Right? As I mentioned many times, you look at this kind of structure here of about 35, that would probably be a safe place to enter positions. 2012, almost 200 days phase 2. 2016, almost 200 days phase 2. These phases are very distinct. They're in unison. They happen together. Now, 2019 was a very unorthodox market. We had an ABC correction. But essentially, what Bitcoin did was it took phase 1 and phase 2 and combined them together. It tried to trick the market, but it was all the same, right? We rallied up the same and we crashed down in the same. And everyone's like, oh, this is because of COVID. It's not because of COVID. This was needed in the market for a multitude of reasons. Number one, we didn't have a technical double bottom. This was a double bottom. We had to come down here to test at this part of the market. Same here, since during this part of the market. It's all the same, it's just combined phase 1 and 2 together. Now we get to our current day. Phase 1 for us was 200 days, right? We had market structure resistance here, we built support directly on top of that, and then we moved into our new resistance here and moved into phase 2. As soon as we broke that new resistance here, our resistance became our support. So we have a strong support zone currently around 32K, even down to 30K, right? Incredibly strong support structure there. So what we've done in the past is phase 2 lasted about 200 days, slightly less than 200 days, slightly less than 200 days. We are, what did we say, 84 days in, right? We are 84 days in to our phase 2 of the market. Now keep in mind, if Bitcoin were to continue on the same path and do 198 days, 180 days. You're looking at towards the end of April, right? Or the beginning of May. Into April and May is where we're likely to break out of this phase 2.
So there you had it from Steve at Crypto Crew University. He expects that we will be marching on up out of our correction in April-May period, which has a lot of confluence with what we've just seen with Raoul Pal's macroeconomic stance and vision, and also with Tim Draper following the cycles as well in the Bitcoin halving as he spoke of. I mean, this is all lining up. I mean, did you guys notice, by the way, it was 84 days until the halving, and we're 84 days into phase 2? It's kind of like weird, the numbers there. I'm going to show you some charts that coincide with that vision. So we'll start here with the Bitcoin on the 2-hour chart. You got the 0 spot 618 fib level of resistance right here, bull market doors, baby, between $48,000 and $49,000, and that's where we had this massive rejection wick, which we actually expect because there's such heavy resistance at that point. We're currently bridging the zone of support, which is around $40,600, and if we break that zone of support, then we could head all the way down to $36,000 and even below that. So like Steve said, I'm not betting on Bitcoin hitting $30,000. I'm not even betting on it hitting 32. I'm going to fill my order where I know I have a good chance at getting it filled, and I don't care about timing the bottom. This next chart is interesting because it adds to the confluence. So this is a Bitcoin one-day log scale, and it's a fib time-based trend. So as you can see here, our next very important date, according to this time-based chart, is February 14th, which also lines up with Eric Krown's analysis that we're going to have our big correction in February, potentially mid-February, to put in our monthly lows. So could Valentine's Day be a point of interest? Could we have a bloody Valentine's Day, blood in the streets? Could you celebrate Valentine's Day this year with your loved one by buying Bitcoin? That would be a good day. So next up, I just want to show you a chart for Bitcoin that also provides even more evidence of what's about to happen. As you can see, this is the 200-day simple moving average, and it is a very big indicator of whether or not we're in a bull trend or a bear trend. As you can see, when it's below the 200-day simple moving average, we are in a downtrend or a bear market, and when it's above, we're in a bull market. So it makes things pretty simple. However, that's only one indication. The one thing that you should be paying attention to is that Bitcoin loves to pull into the daily simple moving average, the 200 daily simple moving average, when it gets a little bit farther away. So as you can see now, we're highly overextended. We're pretty far away from this point of control. And as you can see here, every time we've been pretty far away from it, we tend to come back and touch it again and again. So will Bitcoin rally back down to around the 200 simple moving average? Right now, it's about $33,000, but it's rising every day. So maybe that point will be around 34 to 35K. But the point is, it all lines up. And one last thing I will say is that the true top of this market cycle, I would argue, because although we had this double top, what this was primarily recycled liquidity, meaning there wasn't new money coming into the market for this second double top. So if Bitcoin's true top were here in April, as you can see in this Cardano chart here, Cardano topped in September of that same year, so 6 months later. So it's the Bitcoin show followed by the altcoin season, and the altcoin season begins once Bitcoin starts to pump and levels out a little bit, but the true blow off top for the altcoins for Cardano, which represents a lot of them, I mean, usually they move in unison, for the most part, was 6 months after Bitcoin hit its top. So that's just another indication of when we could see all-time highs for altcoins coming in. So you've got time, that's the message here, but you must use the time wisely and act not in a rush, but with a sense of urgency. Moving right along, we're going to check now Bitcoin compared to gold and what happened when the Gold ETF was launched. So we'll start with this chart. It says, great comparison chart of potential Bitcoin price due to Bitcoin ETF performances as compared to gold price due to gold ETF. So here we have gold. And after the gold Bitcoin ETF was launched, it had a correction period or a sideways accumulation period of about 3 to 6 months. It didn't just take off into oblivion right away. And that's what we're seeing now with the Bitcoin spot ETF for various reasons. Reason number one is there's heavy sell pressure coming in from Grayscale. So basically, Grayscale was trading at a massive discount throughout the entirety of the bear market, and it was a trust. When that trust was converted into an ETF, then they started to charge really high fees, 1.5%. So people just started to migrate their Bitcoin out because when it was a trust, it was a one-way street. You couldn't redeem that trust share for Bitcoin. But as soon as it was converted into an ETF, you were able to sell it. And so they sold for a big profit because they had buying heavily discounted rates throughout the bear market. And so there's a lot of sell pressure on the market because of that. And also because of one whale that had been selling a lot of Bitcoin and the miners. So it's just par for the course. As you can see here, let's go back to this other chart. This is another chart, another perspective. So here we have the Bitcoin one-day chart when it broke above the 200 simple moving average. And that's compared to gold when it broke above the 200 simple day moving average. So after that happened, it was pretty much fireworks all the way. But as you can see, it kept pulling in to this same level in the bear market as a level of support. So then we have here a more extended one. As you can see, we're highly overextended now. And anytime that happened here at the gold ETF, here and here most notably, we had a sizable correction back down into our support area. So that's another point of confluence in our favor that we could get this correction that many want as an opportunity to enter the markets. And here we have Bitcoin surpasses silver to become the second largest ETF commodity in the US. That is huge. I mean, this is like a record. Look at this. Third update, 117, Bitcoin ETF holdings. Fidelity posted their update, and it's another huge Bitcoin buy. I mean, the money's just been pouring in, setting record precedent for demand of an ETF. I mean, in history, probably. Here's the latest update. Despite GBTC seeing a negative $590 million outflow cash Friday, the nine overwhelmed it with $623 million, third best day. IBIT and FBTC both $200 million, while BTCO and HODL had their best hauls to date. Total net flows stand at $1.2 billion as Nine's assets under management hit $4 billion versus Grayscale's negative $2.8 billion. So basically what it's saying is that over $1 billion in fresh cash came into the market. Very important. We're getting new liquidity injected into this market, not just recycled liquidity. And it's outpacing the sell pressure from Grayscale and other people who are selling. So for now, as long as we have that outpacing the sell pressure coming from other areas, we will be stable in accumulation zone and we won't see a further correction until that liquidity dries up and actually the sell pressure outweighs the buy pressure. And here we have the Nine saw another jump in volume today, up 12% versus Thursday and 53% from Wednesday, a rare phenomenon. Also check out FBTC, seeing more trading than IBIT. Those two are in a legit duel to be the one. You remember that top analysts predict that all of this will get consolidated into the top 2 or 3 ETFs and the other ones will probably close down. So, but all of them posting huge numbers for newbies. Competition is making them all hustle twice as hard. For context, as a group, the Nine's 1.2 billion in daily volume puts them in top 1% of all ETFs with GBTC as well. But even if you single them out, they're in the top 2%. Keep in mind, the average of ETFs in the top 2% is probably like 14 years old. So pretty wild to get there in 1 week. We are making history with Bitcoin and now plugging Bitcoin into Wall Street and into all other financial institutions. This is big. I mean, we just did the equivalent of 14 years for other ETFs in just 1 week. So we're right on track, and you better believe that this doesn't happen overnight. These guys at Grayscale and BlackRock and ARK, they're all on the phone like Wolf of Wall Street style, calling these boomers and explaining to them why they should get their money, move it into Bitcoin, buy Bitcoin shares in their Bitcoin ETF, and And they're hustling like hell right now. I can guarantee it. So this is a very exciting time, and you should not be discouraged by this market downturn. The opposite, you should see it as a massive opportunity. Tomorrow, I'm going to shed more light on billionaires of the world who have a different vision for our future, and also presidents, as the Argentinian president, Javier Milei, broke the internet. So stay tuned for that episode tomorrow. You're going to love it. And that's all for today. Thanks for tuning in. I'll see you tomorrow.